All right, let's just jump right in. Yesterday, wow. Yesterday was not just another day on Wall Street. Not even close. It was fast, it was brutal, and it left a lot of us scratching our heads wondering what on earth just happened. So today, we're going to untangle that whole mess piece by piece. First things first, just look at this number. Negative 13.4%. I mean, what do you think that is? Some crazy tech stock that just missed earnings? A cryptocurrency? The entire market of a small country? Nope. That was IBM, International Business Machines, the definition of a blue chip stock. Over $20 billion of its value just gone in a single day. And that one number really tells you everything you need to know about the kind of carnage we saw on Monday. So yeah, let's break down the damage, because as shocking as that IBM number is, the pain was felt across the board. It was like the market completely hit the reset button on the entire year. You see all the red there, obviously, but look really closely at the S&P 500. That 1% drop might not seem like a catastrophe, but it was just enough to push the whole index negative for 2026. Think about that. All the progress made since January 1st, wiped out, gone. And the Dow had it even worse, shedding over 800 points. Just brutal. So the big question is why? What happened? Well, it wasn't just one thing. It was basically a perfect storm. Two completely separate, really powerful shocks that hit the market at the exact same time. Okay, so the first shock came from the world of AI, and this wasn't about a bad earnings report or a product flop. No, this was about an idea. And for a huge slice of the tech world, it was a terrifying one. So the AI company Anthropic put out this announcement about new coding abilities in its tech. And the market, it just instantly made this huge leap. The thinking was, wait a minute, if AI can code this well, what does that mean for human software developers? And what does it mean for all the companies that sell software to them? That one thought just sent this massive shockwave through the entire sector. And you can see the results right here. IBM, CrowdStrike, even Microsoft got hammered. And look at Salesforce, Adobe, DocuSign, all hitting 52-week lows. Just a bloodbath. And while all of that was happening, a totally different drama was unfolding over in Washington. This one was all about trade and tariffs. And boy, was it a masterclass in market whiplash. Okay, so here's how this crazy whiplash played out. First, the Supreme Court strikes down some old tariffs, and for like an hour, the market lets out a huge sigh of relief. But then, bam! The White House uses this obscure trade law, Section 122, to just bypass that ruling and slap on a brand new, even broader 15% global tariff. And here's the kicker. That move started a 150-day clock, which creates this hard deadline for any new trade deals in late July. And this slide right here, it shows you the market's reaction perfectly. It was this massive rotation of money. It just fled from tech and software, the clear losers from both the AI and the tariff news, and it ran for cover. It ran straight to safety. I mean, look at Walmart, up over 2%. When you see a stock like Walmart rally on a big down day, that is a classic fear signal. What's really interesting, though, is that NVIDIA basically held its ground. It's a sign the market is trying to protect it ahead of earnings this week. Which brings us to today, Tuesday. See, after a huge shock like we had on Monday, the market kind of stops the frantic selling and starts asking questions. It's looking for data, it's looking for guidance, really for anything that might give a clue about what comes next. And today is absolutely packed. We've got a whole parade of Fed speakers lined up all day, and that's no accident. The market is desperate to hear what they think about yesterday's chaos. But the main event, the one number that everybody is waiting for, that's at 10 a.m. Eastern, it's the Consumer Confidence Report. And to understand why that report is so critical, you just have to look at what's happened to the odds of a Fed rate cut. Just last Friday, the market was pricing in an 85% chance of a rate cut in June. 85%. It was basically a done deal. Now look at today. That probability has absolutely collapsed. It's down to just 58%. In just a couple of days, all that conviction has just evaporated, and now it's been replaced by a whole lot of uncertainty. The market is definitely getting nervous. And so this is the central question, right? This is what that 10 a.m. report is all about. With this new threat of tariffs looming, is the American consumer, the engine of our entire economy, starting to get worried? If that confidence number comes in weak, especially if it's below that key level of 80, you can expect the market to react, and react very, very fast. Now, as important as today is, we've got to remember it's really just one piece of a much bigger, much more complicated puzzle this week. The uncertainty is a long way from being over. I mean, look what's still out there. All eyes are on NVIDIA's earnings on Wednesday. Their results could either confirm Monday's AI fears or maybe, just maybe, completely reverse the whole story. At the same time, we've got geopolitical risks simmering in the Persian Gulf, that tariff clock is ticking louder and louder every day, and big money is still hedging its bets. We can see that in the prices of oil and gold, which are holding firm. So, with all this stuff flying around at once, what's the actual takeaway? Well, in a market that's this wild, the most important thing isn't about being right on the direction. It's about how you approach the chaos itself. Monday was a day for reactive trading, for emotional responses, and a lot of people got hurt chasing moves up and down. See, the real damage usually doesn't come from that first mistake. It comes from the second and third emotional trades you make trying to fix it. Today, the approach has to be totally different. It's got to be about planning, defining your levels, knowing where your stops are, and just accepting that sometimes the smartest move is to make no move at all.
And that leads me to this last, and I think most crucial thought. In all this chaos, just remember this. Flat is a position. You don't have to trade every single minute of every volatile day. Sometimes the most profitable thing you can do is just step back, protect your money, and wait for things to become clearer. Because after all, the market will be here tomorrow.